It'll be here in just a second. You should see a bar that says we're live. So we are. Can you hear me all right?
Yeah, I sure can.
All right, good deal. All right, let's give just a minute or two for everybody else to show up. We've already got people in the queue waiting. Thanks for coming, appreciate it. Let's see here. So let's go ahead and introduce you to the people who are waiting, and then we'll start off from there. But first, I'd like to thank you very much, Robert, for talking to our group. We really appreciate the information, and we'll try to develop a relationship and see if we can't both, profit from it and be mutually beneficial. A little bit about Robert. He's a representative at Triumph Capital Partners in California. He's backed by private equity and has a team of super talented processors and executives. He's part of the fix and flip non-owner investment property explosion and what he hopes to be one of the great trends in real estate for the next decade. Me too. From the massive population growth to the self-education of the individual investor, he sees the sector as one to be in and intend to ride it as long as it will have him. Yeah, me too. He truly appreciates the opportunity to be part of our group's journey. And once again, Robert, thank you very much for talking to us today.
Thank you very much for having me, and it's a pleasure. And whether we ever do business or not, I hope I can put some insight into what you guys are doing.
Yeah, before we went live, you told me a little bit about your background. Can you just give us a little bit more? What was really interesting is you're a real guy. You don't tell all your stories of, hey, I made $1 million in 30 days, right?
Right.
You told me something where you actually bought high and got hurt just like the rest of us.
Yeah, I've done everywhere from, we'll start with some of the fun stuff, and then we'll go to the painful stuff because I'm still trying to block it out. But starting in late or early 1990s, I started as a stockbroker. Actually, was an options trader. So I rode that trend with the Nasdaq and all the way up to almost 5,000, and that was the first time that I've ever been part of a trend and didn't know when to get out. I learned the hard way through that, and at the same time, I was also a real estate guy, so I was trying to invest my own money and run a stock brokerage firm at the same time. So through that, I rode the ups and downs of the equity markets and also the real estate market. Right around that time, I had purchased my first house, and went through the pains of understanding home ownership as a young man with a family, and the growing pains that go with that. Eventually, through both of them, became successful enough where I ended up owning probably about 20 different properties all the way up till, I'm going to rush it all the way up now to about 27, 28 right there, where everything really started popping off. Had my real estate license at the time. I was doing hard money loans, and hard money loans, it means something different to everybody. I mean, I had lent money to people against their yachts. I lent money to people against a shotgun collection. That's another form of hard money. Hard money with houses is generally related to higher interest rates. So during that time, I personally had to short sell several of my own properties, retained a few, and again, learn from the ups and downs. I believe I'm old enough now and have seen enough that this wave, and I call it a wave only because it will end someday.
Yes,
I believe with the massive population growth, like we were talking about, they're just running out of space, and we saw that unfortunately in your guys' state in Texas, where they're blaming some of the flooding on just the massive amount of people that are around. So the new areas that are being developed, some of the ones that with better infrastructure are more prized, and you're probably getting better asset value out of them. So in a nutshell, I have the battle scars. I don't have a crystal ball, but I got back into real estate not too long ago, about a year ago, full force. I've always been involved with it, but got involved with Triumph Capital. Triumph Capital started and is backed by a private equity a group called Brixton Capital, and you guys please look them up. Do your due diligence on Triumph, myself, Brixton, to make yourself comfortable, and I always recommend that.
Brixton? Is that how you spell Brixton?
Correct. Brixton. They fund us, and we'll never be with a lack of money. Our goal is to be we can white label our products, and what that means is we can give our money to another lender, and they can lend our money out under their veil. So if you do a loan, let's say through the old Countrywide, and you did a hard money loan, it might be our funding, it might be our money, but it'll appear as Countrywide's money, and that's what private label is in the real estate market. So you may or may not have already received a loan from our funds without knowing it.
Interesting. Okay, great. Well, thanks for the background. We'll go ahead and got some questions coming in. I guess let's start from the top and just do a little bit of general stuff and then get into the deep stuff. So with the flood of, a bunch of new investors, a bunch of, this run up that we're talking about, these good times. So there's been a lot of new investors, a lot of new lenders. Can you tell us a little bit about your experience you have in hard money lending?
Sure. I've got about 10 years experience in hard money lending. I couldn't tell you right off the top of my head how many deals, but probably in the hundreds. Okay. And I've seen, again, in any deal, you're going to see the good, the bad. As far as deals that I've seen and brought all the way to fruition, that'll be in the hundreds. As far as many deals as I've started, that could be in the thousands, because you're going to get people that don't get approved, that back out, that were just fishing. So I've seen, scenarios from somebody trying to borrow money from their brother to close to A+ credit, serious flipper, done 20 of them, and can get funded within 4 or 5 days.
Okay.
So I hope I answered your question.
Yeah, sure. So are you said you're direct to Brixton, right? You're not a broker in between, or is it a broker type situation?
Well, I got to be careful, because while I am called a broker, while I work for Triumph, I'm independent. So my job is to be, and I like to, and John and I, you talked about this at the beginning, is I like to consider myself a concierge between the investor, which is the borrower, and Triumph, which is technically my employer. But I work for both of you guys. I'm bringing Triumph money through the investors, and I'm bringing the investors money through Triumph. And my goal is to make both people happy. And if I can, I'll dive a little bit further into that, John, like we were talking about.
Sure.
So whether you go through Triumph or anybody else, a deal is going to be run through a company's analyst. And the analysts are paid to vet a deal. We call it a gut check. Give you a gut check, let you know what their initial reaction is. Hey, is this risk that we're going to willing to take with our money? Is it risk that we think the company can make money off of? And then they're going to put a price tag on that risk. And that price tag is going to be your interest rate and your points. So then it's my job to come back to you and say, listen, this is what Triumph believes that your credit, your assets, your experience are worth, and what we believe we can do for you. And a lot of times, being the concierge and knowing my investors, I'll go back to my analyst and go, hey, we got to do better than this. This guy's got a proven track record, or gal's got a proven track record. They have excellent credentials. They have money in the bank. Their credit's okay. We're not so much credit based as we are asset based. And I try to work to make sure that the analysts have deals to analyze at the end of the day by bringing complete deals to Triumph and making our investors and our principals at Brixton happy by doing deals.
Oh, excellent. Okay. So you had briefly mentioned that you base some of it on, okay, well, let's back up just a little bit. Just some people might not even know. What is hard money lending? What is hard money? Why is it called hard money? And why would you use it over traditional forms of lending?
Sure. Hard money is essentially just interest rates that are above and beyond what's normal. Let's say right now you can buy a house with good credit at 4%. Hard money is going to be 4 points, 5 points higher than that, and it's going to be willing to take extra risk. We're not financing your primary property. So your home, you're not going to get a hard money loan on your home. We don't dance in that arena. We do non-owner occupied investment properties. So we are taking a risk that you might abandon that. You more than likely you're not going to abandon your home. So
Right.
the language will change. And being hard money, we're taking that risk that, okay, this guy or gal is going to go out and they're going to try to flip this property. It doesn't work. Well, we're going to put a little bit higher interest rate on that because we also know that there's a risk there and we're taking a risk with our capital. So it's just non-traditional financing, and hard money is another way to put it, another slang term to use for it.
Okay. And got a question come in. What are the typical terms and down payment for a standard flip for a person? Let's give a couple of scenarios.
Sure.
Someone who's never done one, will you even talk to them? And someone who's done a few.
See, that's the first part of that's excellent. It's like money and credit.
Mm-hmm.
If you have never done one, it's very difficult to get financing for. If you've done one, it's pretty easy, especially if you've done something in the last 18 months. If you haven't done one, we'll have to sit down and look at a lot of external factors. And I do have places you can go personally. I'm not sure that I can help you, but I can direct you to somebody that can. With Triumph, we prefer because of our private equity group that backs us, people with 1 to 3 flips. If you have 1 to 3, you're looking at a 25% LTV. If you have 3 or more, 15%. And there's that myth out there in hard money that you can be 100% financed. That to me is people that are trying to sell books and seminars. I have personally never seen it.
Yeah, I haven't. I mean, if right, in theory, if you get a house like 25 cents on the dollar or something, but I mean, you can't do that here.
Yeah, if I could go back to my stock brokerage days, if you made a client $10,000 and they had a $100,000 portfolio, you might tell them you made them 10%. If you had a $1 million portfolio and you made them $10,000, you might change the percentages to numbers. Hey, we made 10 grand today. Make them feel better instead of saying you made 0.5%, right?
Right. So what if I know a couple of our people have moved out of their primary residence and have rented out properties, their property, and then have subsequently sold that property? Would that be considered a transaction in your book?
I would consider a transaction. Again, I have to run it by my analyst. So if it's non-owner occupied and you have a renter in there, we could definitely do a loan for you.
Okay. So you do. Okay. So let's talk about different kinds of loans. Hard money, obviously, for fix and flips. What about long-term rentals or construction? Different types of loans.
Sure, we're going to consider all that hard money as well. The rate will be lower because it's a little more. There's some more security there. You do have revenue coming in. So we have a 2-year and a 7-year rental product. Coming within the next, I'm going to say 30 days to be safe. We'll have a 30-year rental product, which, as each one increases in years, the risk goes down, and that'll bring the rate down as well. So the 30-year product will not have as long a high as rate as the 2-year product.
Okay. So if I wanted to flip a house, but I get caught in the, let's say I want to rent a house. I just flat out want to rent a house. And I want to do the 2-year or 7-year. I assume at the end of the 2 or 7, there's a big balloon. So the thought process is to refinance out somehow, right?
Right. Well, it's not so much that there's a balloon as that that's just the end of it. So we need to get you refinanced out. At that point, we'd either refinance you into our 7-year product, or we would try to match you with a lender that could take you all the way to the next 30 years if you wanted to.
Interesting. Wow. Okay.
And if I could expand on that real quick, John, the reason that we're in the non-owner occupied, and a lot of people won't just come out and say this, is nobody wants to go through the process of repossession. Nobody wants to come in and take your home from you. There's homeowner rights where people can be in their home for 12 months to 24 months without ever paying a bill, which then costs money to the company. So being in a non-owner occupied investment part that we're in, we don't have to deal with those facts of life where you're throwing them, a family out on the street or something like that. This is an investor that took a risk, knew the possibilities, and if it works out, fantastic. If it didn't, then it's funded in an entity. That entity can do what it needs to do, and we can get our money back a lot quicker than an owner-occupied space.
Okay, so for sure, people need to go ahead and get what I heard. They need to get their LLC set up in advance.
That's correct. And whether you use an LLC or an S corp, and again, remember, there's one red flag I'll say from experience is an LLC does not protect you from the end of the world scenario. There's other protections that you need that I'm not qualified to tell you, but I would tell you that an LLC, I thought I was bulletproof with one that I had. Far from it. I've got a few. I took a few in the shoulder, So when you do your risk, make sure that just because it's an LLC, if something goes wrong, well, they know who the owner of that LLC is, right? They're still going to come after you. When people file a lawsuit, they name everybody. They have to name everybody right away, and then the people fall off as they're, freed from that lawsuit. But make sure that you're doing your due diligence and that your LLC is put into and you have the proper covenants in there to protect you and your family and your assets in case your investment does go bad. That would be my caveat.
Great. Do you have any, I guess you might not in Texas, but have any recommendations of LLC providers?
I kind of did it the cheap way a few times. I did LegalZoom.com, and I regretted it. Yeah, and I regretted it. I got a bank account open. Everything went perfect for a few deals, and then I had one where a contractor got messy, and from there, a couple other messes were created. So I would tip my hat and pass on that question, John.
Yeah, sure, no problem. Yeah, you bet. I don't blame you. So we mentioned a little bit about the asset. You're looking at the asset more than the credit score. What are you looking at as far as the individual's credit score, and what on the asset are you looking at?
What's more important is that the client has the assets in the bank to finish the project, excuse me. So we'd like to know that if something went bad, that maybe you do have 3 extra months worth of payments in the bank. So say that you have an extra 15, not everyone does, but an extra 15,000 lying around. Is there stocks? Is there equity in a home that if something goes bad, we can come back to? So the credit score, while it being important, it's not as important as experience and what kind of assets you have. And that's why some people do pool. An LLC is perfect for that because you can have 2 or 3 partners. One may have zero interest in being a fix and flip person, but has the assets and can get rewarded for that.
So what if we did could we do come to you as a JV agreement between multiple LLCs, or does it need to be the one LLC?
I would bring it as the one LLC, and I would have a JV agreement between those LLCs that we, if we needed to, we would know about it, but there's no reason to bring extra paperwork to the table, in my opinion.
Well, okay, so I guess my real question is this. Okay, so let's say that someone in our group has a deal, right? Mm-hmm. Never done a deal before. I say, well, okay, either me or, somebody else who's done a deal or two will partner with you, right? Using a partner, right? So would I say, all right, Robert, me and my buddy here, we both have LLCs. What's the best way you would recommend coming to you?
That's such a good question that I'm not sure I want to answer it. I guess let me say hypothetically, I would say to become a member of that LLC, but you would probably be first in line as the person with the experience that would be first on the deal. So you'd have to be willing to do that in a hypothetical world.
Right.
So yeah, there are ways to satisfy the analysts and to make a deal completely above board, which that would be. But your neck would be out there and not that person's.
Okay, so the person who signs, so there's it's a recourse loan, right?
Yes.
Okay, so it's a recourse loan. So the main person has to sign for the LLC or whatever. Even though it's an LLC signing for it, it still doesn't make any difference, right? It's still a recourse loan.
Right, and that's where I was going with the protection with the LLC. At the end of the day, it still comes back to you,
Yeah,
unless,
sure.
yeah.
Yeah, I mean, you're not going to, I don't find too many non-recourse loans around here anymore.
Yeah.
Okay, so so the application process, and then we'll go back to the terms a little bit here in a second.
Sure.
Yeah, I need I saw you on the REI Hustlers webcast. I need to get I've got a property under contract, and I'd like to get a hard money loan. What do I need to do?
Sure. John and I have exchanged several emails. At the bottom of my email, in my signature line, is a link. It says "Apply for a loan" here. You double click on that, and that will take you to our quick app, which is, I think it's about 20 to 25 questions, very relevant questions about the deal, your estimated profit on it, what you think you're going to need to rehab it. If you're moving any fixtures around, are you going to complete tear down? Are you just remodeling a bathroom? That type of thing. And then I can have an answer for you on that within 24 hours. And that's our gut check deal, if you will. That's the first phase of the application process. So that'll come through. The analyst will take a look at that. Basically, we'll Gazillo the neighborhood, get some comps in the neighborhood. Okay, this person's found a jewel. We're not certain. And we'll come back with our first rate, right?
Okay.
The second part of that, once that comes back, I can get you a proof of fund letters within 24 hours. So you need it for the bank or whoever. I can get you guys out a letter in that time period, sometimes the same day, more than likely. You guys have advantage there because if you start at 9, it's only 7 o'clock here, and we could be all the way. We could be halfway through the process by then.
Okay.
The second part is a full application, which is going to include an appraisal kit, and that's where a lot of people get stuck these days now too. Is we have to have an appraisal. People want to do a BOP or something like that. There has to be an appraisal, and it has to come from. It comes from a third-party company. It has nothing to do with us. It's roughly $500 is the cost for it, and it's just something we can't avoid. It's part of what we do. And then the third part is really dotting the I's, crossing the T's, making sure your entity is in good standing with the state, who we're going to fund to. The appraisal came back well. All the other docs are in a row. We can fund. I've seen a deal done in 4 days. Is that unusual? Yes, but that person really had all their ducks in a row. I've seen a deal fund in 5 or 6 days for somebody that wasn't too prepared. Realistically, 7 to 10 days is if you're not in a huge hurry, that's probably very realistic. I'd rather under promise and over perform every day. So,
is that 7 to 10 business days, or just counting the clock?
When it comes to funding, we have to use business days, but my guys will work on Saturdays, especially myself, for a good deal. So I can get the first part done, which may be a 24 to 48 hour period over the weekend a lot of times, cutting a day or two off for you. And it's really, as your concierge, how fast you're pushing me to get it done. And, hey, Robert, this needs to be done by next Monday or I'm going to fall out of escrow. Okay, I'm going to go to my guys and tell them, can we do this? If I got to buy pizzas tonight, what do I need to do to take care of you guys to make sure we get a deal done for Triumph and for our borrower?
Okay, so what's the typical, let's say the typical points in interest rate for a 1 to 3 experienced guy?
Sure, it's going to be roughly 8.5 to 12, and that's probably pretty much an industry standard. Points, more than likely 2 for this group. I definitely keep it at 2. Okay. You're going to hear a lot of people go up to 3, and people are going to let's see. If you're a boxer and you smell fear, you're going to go in for the kill, right? So if you seem like a desperate lender or somebody that needs money desperately, my computer's about to run out of batteries. Hold on 1 second for me.
All right, you got it.
Hold on 1 second, guys. I apologize.
No problem. So we're going to hit him with some good questions, you guys. So make sure you I've been kind of looking. I see you guys got a couple of questions up there. I'll ask him. But I see you guys been putting some questions up there. I appreciate it. And definitely, I mean, this is for you guys to see if you guys want any of the questions answered or anything.
I'm back, guys. Sorry, that was bad form. I apologize.
Hey, no problem.
I was fully charged.
This is real estate, man. You got to by the pants, right? I mean, you just got to handle the stuff that comes up.
So yeah, where I was going with that was on the points and on the interest rate is don't take the first 3 points. It's roughly 2 points in the industry is pretty fair, I believe. The Triumph will always get a point off the deal. So whatever if I can do a point. If you grind me, can I go a little bit lower? Yeah, but does it get worth it at that point? 3 to me, I've never done that. I've seen 3.5. I've seen 3.5 before. I just I got to sleep at night, and I just can't do it. So, but yeah, people will charge what they can get away with. So always call people out on their actions. Would be my advice.
Definitely. Yeah. Typically around here, I do see a lot of threes in about the same, the 12 to 15. I mean, it's even higher, 12 to 15% interest rates. So you've got the points, the interest. What are the hidden fees? You said there's 500 appraisal fee, and then what else?
There's a $925 origination fee, and there's a bunch of, I don't want to say a bunch, but about 4 or 5 little ones that add up to about $500. So you're looking roughly, off the top of my head, about $2,000. If we'll call them hidden fees.
Okay.
But I would fully state them to you after the gut check was in place. I would come back and let you know exactly what they are. If there's something unusual, if it's in an unusual place, certain spots in Florida we won't lend in because of the low ground. So there's always a caveat. You never say never.
Yep, sure. Let's see here. Do you just do residential, or do you also do commercial?
We do commercial on a case-by-case basis, and if you need a referral for a commercial loan, or apparently an ice cream cone, because I'm going by my house if you can hear it. But I do have a lot of connections on LinkedIn and other people I've known throughout the years that do this. And I personally don't like to turn deals down, so I have a network of people where I can go and partner strategically with them and also get paid by referring you over, to be full disclosure.
Nice. That's nothing wrong with that.
Mm-hmm.
How do you compare, Vamsi Krishna asks, how do you compare rates for rental loans with traditional loans?
If I understand the question correctly, they're going to be a little bit higher just because you're not in there and it's easier to foreclose again. I mean, I just go back to that statement. If you want to look at it like that, it's harder. Triumph doesn't want to make the news for putting a family out on the street.
Sure.
Yeah. So that's really where, in my opinion, that's the bottom line. People will give you all kinds of other reasons for it, but that's my 2 cents.
What about new construction? Do you lot/construction financing for new spec homes?
Yes, we do ground up products starting in 2 weeks. So I'm very excited about that. I have several banking relationships, one in Boston that I cannot wait. I mean, personally, my income is going to go up a little bit, not bragging in no way, but I've been waiting for this product for quite some time now and very happy about it. And I will get it to you and your group within hopefully the next 10 business days.
Awesome. Yeah. Do you have some kind of like a loan packet or something we can see, or?
I'm personally waiting for that myself.
Oh, okay. Okay.
The powers that be are developing that. They're the ones that are developing the 30-year rental program as well, which should be out this month. So as they come out, I'll get them out to everybody.
Yeah, that's awesome. Awesome. We'll be definitely waiting. So, are those the other types of projects? When you say commercial, are we talking about like 5+ units apartments? Or are we talking about like strip centers? Or I mean, what stuff do you not do, I guess?
The apartments, again, all that's on a case by case, and it's really going to at that point it's going to depend on the borrower's experience in commercial. I think there's a lot of great deals out there for commercial flips right now. A lot of the centers that are dying due to the people not going to malls any longer.
Yeah.
I don't know what all that space is going to be. If Best Buy ever goes out of business, Sears, what all the spaces will be. Somebody will get creative and think of something, and that would be considered, in my opinion, a commercial fix and flip. And
I'm scared to do that. I might do some apartments, man, but them strip centers, they still scare me.
Yeah, I know they've cost people about every 20 years. They cost somebody a small fortune.
Yeah. So the application, back to some of the application stuff. So if I have, so is the lending based on ARV or based on current market value or based on, something else?
So we'll go. Let's take the person with the three flips, which is the most sexy one I can talk about. So it's 85% LTV with 100% ARV. So we'll base that 85% off of the pre-assumed ARV of your completion price.
Okay.
So you're getting more money essentially.
Right, right. So 85% LTV. So what about, do you provide money for rehabs or we need to come up with that?
No, we
Or
provide money.
I'm sorry, say that again?
No, I didn't mean to interrupt you. Yeah, no, the rehab money will be put in a third-party escrow, and it can be drawn upon per the contractor as checks come in. The third party will pay them out. So we don't worry about that. You don't have to worry about the contractor will just submit the cash directly to the escrow company or the PO, excuse me, and they'll pay that PO out of escrow.
Okay, so say that for a real life example, say that I have um, a house, ARV is 200,000.
Mm-hmm.
Okay, ARV is 200,000. I'm going to buy it for just round numbers, 100,000.
Mm-hmm.
The repairs, I need to do a lot of repairs, 50,000. So I'm all in at 150.
Mm-hmm.
Okay. And I can, give you comps and stuff and all the other stuff. How much are you saying you'll do 80% of the 150? Is that what you're saying?
We'd go up to 85% of the 200.
Okay, 85% of 200. Okay, I got you.
So that's where the benefit comes in.
Yeah. So it's based off of ARV.
That's correct.
Which is good. Okay. Well, good for us.
And John, sorry to interrupt you. That's where the appraisal is so important.
Yeah. So can we get an appraisal from a person that a real appraisal company that we like, or do you decide that?
We have a company that's nationwide that we work with. So I'm not sending out my brother-in-law to come to your house. It's a nationwide appraisal company. It's third party. We have no affiliation. We get no kickbacks from them. Nothing. Just that's just the people that we work with.
Okay, great. So do you have any special things like the really hard things? Like I was talking to a friend of mine. He is buying Texas tax deeds, right?
Mm-hmm.
From tax foreclosures. I wouldn't think that y'all lend on that, but do you?
Yeah, the note market and the tax market's a little bit different. If he bought them to fix and flip them,
Yes,
we probably could help. I'd have to look at it again on a case by case basis, but to help with the purchase of the note or to purchase something from the federal government, that's not our sweet spot.
yeah. I mean, it's not from the federal government. It'd be from a county, right? The county government. But the problem, I'll tell you what the problem is that when you buy it from the tax entity, you can't get immediate title policy insurance.
Okay.
And if you can't deal with that, then most people can't. I mean, but then they won't lend on it.
I'd more than likely say it's probably a pass for us.
Yeah, that's what I thought.
Yeah.
So if I got the loan from you guys and hopefully I do my job real good, I get it rehabbed, is there a prepayment penalty?
No, not usually. You can pay it off. We'd love it for you to pay it off quicker, right? Right. Going to the person and hey, it's 11. It's a 12-month loan. It's 11 months and 3 weeks. What are we going to do? It's not a fun conversation. So.
But I mean, really, you expect the people you lend to be telling you like check in weekly, right? I mean, check in weekly, right? I mean, we send you emails saying, hey, here's the pictures of what we did. We're falling behind on this over here, but we expect it to come through, because it stopped raining or something,
Yeah.
right?
I mean, life happens, and we do have plenty of extensions, so it's not an end all be all. If it's a 6 month term, we can go out. It might cost you an extra point.
Mm-hmm.
Act of God. I mean, God forbid what happened to you guys happened, in my backyard. I wouldn't be able to pay my bills for a while. So, everyone's pretty understanding, and there are extensions. Yes.
Okay. A big one is, do you require when do you expect payment to start? Right when I sign, or do you wait till I'm done with the rehab and then expect the big payment, or do you just expect some stuff up front, or how does that work?
Sure. Well, the down payment is there. What I recommend doing is asking to have the payments put in as part of the loan, so you don't have to worry about it.
Yeah.
So let's say we put the payments in and make it an extra $30,000 on the loan. If you finish early and you only use 20 of that, well, you'll get a $10,000 rebate. That way you're not going out of pocket. Have one less thing to worry about during your rehab process. That's something that I try to recommend to people if they're willing to do it.
Okay, so you mentioned earlier that when the first phone call comes from the loan the provider, right? And
Right.
they say, oh, it's going to be 3 points and whatever, 12%. And then you said, hey, wait a minute, maybe we can work something out. I mean, would you suggest doing that, or would you say 2 points, 12%? Yeah, I mean, I don't care. I'll take it, if it fits the deal.
Well, I mean, I have 3 different grocery stores around my house. If I could give you a metaphor, I have Albertsons, which is our high end. If I want to feel good about myself, I got a nice paycheck, I'm going to go buy, I don't know, I'm going to go buy my $20 steak from them. And I got another one down the street that it might be 15, another one might be 10. It's kind of what kind of quality I'm looking for. But I never recommend, even at Albertsons, I go, if they can put this thing on sale, we both know it's not worth $20. I've got excellent credit. I had a lady friend it's from Texas that they have, I think between her and her husband, they have a 780 credit score. They have all assets in the world. And my guys came back to them with 12%. And I said, Carrie, please don't laugh, but this is what I'm on your side too. I'm going back to them, and I got it down to like 9.5.
Oh, nice.
So never, in my opinion, if you get told no, it never hurts to ask. My uncle always told me that, at least ask.
Right.
And that's my job as the concierge between, I would technically work for you guys while working for Triumph. Mm-hmm. So it's my job to make everyone happy. You say, Rob, this is baloney. And these guys out of their minds, and I'll go back to them. I go, hey, John thinks you're out of your head today.
Yeah. Wouldn't make any difference.
Right. Well, sometimes, and a lot of times it has. I mean, I've done 3 in the last 2 months that I've gotten the rates changed on. So that's the honest truth.
Okay. Nice. Have you seen a trend of, people are starting to hear rumblings of the slide or the decline or the correction or whatever the hell, the bubble bursting, whatever the term is. In your lending, have you seen any slowdown, or is it still at a rapidly high pace?
It's at a rapid pace because it's California and because we're just running out of real estate. In my hometown here in Oceanside, we have a 3% occupancy rate. People are going to rent properties. There's 20 applications for rentals right now. Certain parts of Texas I know are the same way. So it's really geographical. My brother is a parole sergeant in Ohio, and he's doing fix and flips there for $20,000-$30,000. I joke with him he's going to own Ohio one day, but he just may. And the property's cheaper. You're not going to make as much money, but he's making consistent money, and he's able to rent them out because there's so many people in this world. We're going to have 8 billion people by 2025 or something like that. And it took us all the way up to the 1700s to have 1 million. So I don't know. It's supply and demand, and right now there's not enough supply out there.
No, there's not around here either. So that brings up a good point. Where do you, what areas of the country do you lend, and where do you not lend?
Sure. Currently, go off the top of my head, I know them, so I think there's 7. So it's Washington, California, Arizona, Colorado, Texas, Florida, Illinois, and Massachusetts. Is that 7? I think so.
Yep. I
Okay.
got some.
We're going to go in. We're going into new states on a monthly basis. Triumph has been around for a little over 12 months now. All our principals have been in the business many, many years, but got together again to go off on this great adventure together. So, as we're papering up in different states, we're going to go places, and we're going to come out with new and different products as well. So,
Okay, so I got a question from Michelle. Do you lend on a sports complex? Would you lend on a sports complex?
no, but if you want to send me the details, I could probably hook you up with somebody that does.
Okay. Send them the details, and I will put up your info at the meeting or up here if I can figure out how to do it. What are the pitfalls that we need to be aware of?
Number one is being too conservative with your budget. Oh, I can do this, but I didn't know there was a cracked slab. Typical real estate stuff. Being really prepared. There's a lot of folks out there that are very handy. I consider myself one of them, but I'm not a contractor, so my work does not get approved. Less than adding to the square footage that I added to a place doesn't count. So make sure you're very well permitted. I have a client right now that is running into an issue where he wanted to extend a little bit past the sidewalk, and he can't do it. He has to redraw his plans. The city won't let him take out a piece of sidewalk. So I guess beware of the unknown and just try to think of everything. I could send a couple of different lists I have. There's the top 10 list if you Google them of mistakes of fix and flippers. If you haven't seen them already, please Google them because those are very, very relevant. And always be as painfully truthful as you can on your application because it'll help me do my job better for you. Tell me, let's put all the laundry on the table. It's nothing that I probably personally haven't gone through or personally haven't seen. And it takes a lot of pride I hope to be able to admit that in front of everybody here.
Okay, great. So let me see here. Got an awesome answer. That's good. Let's see. Well, okay. With all the hard money lenders around, I mean, I've seen a bunch of them pop up, as many as new investors are popping up, right? What sets you apart from your competition?
For me personally, because I'm independent, just like everybody else out there is really, at the end of the day, they work for Remax as a realtor. You're really your own business. What sets me apart is what I was trying to emphasize earlier is I'll go that extra mile and go back to my analyst. I've been through enough that I'm not afraid of some kid that just got out of school that tells me that your house is worth 400 when I know it's worth 500.
Right.
I've traveled the country. I know the areas. And what sets us apart, or me apart, is I will truly be a concierge for you, and that's how I prefer to look at myself. What sets Triumph apart is that we're not going to run out of money. We're not fly by night. Our private equity partner in Brixton has been around. They're going to keep funding us, and the money will be there. As far as anybody else that pops up, it never serves anybody any good to talk bad about the competition. I wish them well, but knowing me, I hope in this few minutes here that you understand that I'll go to bat for you. And if I don't, my reputation's ruined. It takes a lifetime to build one and a minute to lose it. So
yeah, you got that right. So let's see. One other question: do you have any foreclosures?
I do see them once in a while. We actually had to get a property back in Palm Springs. If that's what, if the person's looking for foreclosures, I could more than likely put you on to somebody. But a lot of our loans are done with trusted partners, and we do not. I think we have 1 or 2 in our portfolio at the most. So it probably wouldn't be a big help there. But if you're looking to purchase foreclosures, I can put you in touch with somebody to do that.
Yeah, we're always trying to find foreclosures. Yeah. At least ones with deals.
Right.
Let's see here. That's all the Viewer questions. Okay, so one question that I have is that constantly on LinkedIn and other places, being solicited by these awesome lenders with the 5%, um, interest rate with no money down, all these guys. How would we filter the scams? And how would we, I mean, without even talking to them and stuff, I mean, I kind of, if they were slicker, I might fall for them,
Mhm.
but I'm sure there's some really, and I've got another video up here on how I almost fell for a scam, but um, what couple of things would you tell us to that quickly we would identify, oh, that's a scam lender, we're not going to do it with him?
Okay, one example is I'm dealing with an individual today who's got a 4.88 first from Wells Fargo. Excellent credit score, good person, whatever. 5% hard money. Wells Fargo's 12 bips away from you. That's
Right.
not real. Look at what your credit union's offering. If it's not 3 or 4, maybe 5 points higher than that, that's probably not a real deal. No one's going to. Why would I risk my capital? Think what would you do with your own money? Am I going to lend somebody that's got 2 flips under their belt my capital at 5%, or would I lend it to him at 10? I mean, just
Of course.
it passes the smell and eye test.
Right, right. What about these portfolio lenders? They seem to, I mean, I don't know of any, but I almost got to deal with one. They seem to have good interest rates, a little bit high on the points, but they were willing to give a good amount of the for the house and the rehab for like I can't remember exactly, a point or two, but like 5 or 6%. But they have a cap of how many properties that they can do that on. So, what are your thoughts on portfolio lenders?
I don't really dance in that space too much, but if it's again, if it's too good to be true, then it is
Right.
usually. Um, what I think a lot of the funds that bought up my neighborhood and probably everybody else's in the late 2000s are looking to unload right now.
Oh well,
So I'd be careful of taking somebody else's dirty dishwater.
definitely. So let me put this up here. Um, how can people reach you?
You can text or call me by cell at 760-936-1743. And I'm good with either text or sales. Some people don't like to talk on the phone anymore, so or you
Yeah,
can email me at Robert at Triumph.
shoot.
I got those same fingers. Dot capital. The interesting part about that is there's no .com on the end. It gets a lot of people.
No.com.
Don't ask me how that works, but that's the way it is.
Yeah, it's
So,
just one of them vanity
yeah,
extension, whatever you call
yeah.
them. Cool. So let's see here. If that, I'm going to check one more time for any other questions, everybody. Good with questions? Let's see here. This is your chance to ask a hard money guy. Okay.
And
Um, and
and
I'm
John, if
sure,
any,
I'm
sorry.
sure, I'm sure you'll be getting some calls. Um, is there anything else that we should know about that we haven't covered already?
No, I just say that if you get told no once, there's a lot of people doing different types of lending. Ask and ask me, is there anybody that can do this for me? A lot of people take the first no, and that's the hardest thing in this business is just don't take the first no, or don't take the first yes, even if hey, 12 points and 3 points and 12% interest. Oh, I'm super lucky to have this loan. Well, are you? Or are they lucky to have you? Are they lucky to have you as a customer? That's what I try to tell my people. it's a two-way street. Without you, we don't exist, and without us, maybe you don't get your money. But we're a commodity just as much as sometimes are more than the house is.
Cool, awesome. Well, I think that's it for today. Luckily I got you out in less than an hour. That's good. But I really do appreciate you talking to our group, Robert, and I definitely will call you when we get our next deal.
All right. Well, again, guys, thank you for having me, and John, really appreciate the opportunity. And yeah, I'm here. No pressure. I'll give you what's up, and getting too many gray hairs to spend time doing the other stuff. So
I hear you.
Everyone have a great night, and thank you so much for your time.
Thank you, sir. Appreciate it.
All right. Take care. Bye-bye.
Bye-bye. All right, guys. Well, that was Robert Jennings with the Triumph Capital. Hopefully, you guys got a lot of information from that. And oh, let's see here. I didn't get that. Sorry, Jerry, about the subordinate the lot for the down payment. I guess. Oh, you know what? There's two. Shoot. There's two chat windows, one up, one down. I'll learn next time. Sorry, Jerry, but I'll ask him about it and get back with you. If anybody else has any other questions, send them to me, and I'll send them over to Robert. And if you guys have any other topics that y'all want to discuss, I will definitely set something up. If you want, contractors, title companies, whatever, let me know, or let McKenna know, and we'll be glad to do it. All right. As always, thank you for coming. Be a light, speak truth, change lives, and I wish you all much success in your business and in life. Catch you at the next meeting, next Wednesday. Peace.